One of the innovations recently in the self-storage industry has been demand pricing. This is a pricing strategy where the unit pricing adjusts daily or weekly depending on the availability in your facility and the availability in the sub-market. Let's talk today about demand pricing for your self-storage facility. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. And in this series, over the past few weeks, we have been talking about closing the gap between the larger investors, the REITs, and the small investors. And one of the tools as a small investor we use is the Storage World Analyzer, which is a financial analysis tool that we use every time we look at a particular project, whether we're building it, whether we're buying it, whether we're converting it. And what it does is it helps us accurately predict the cash flows and the performance of any facility, and it will inform us what we can pay today for those future cash flows. If you're not using the Storage World Analyzer, I invite you to consider trying it. Go to storageworldanalyzer.com or go to creatingwealththroughselfstorage.com. Find out more about it. And what I do is, my mission is to help the small investor get in this fantastic business of self-storage or grow their self-storage business in a strategic way that creates true wealth and a fulfilling career. And if you're a self-storage owner today, one of the things you should at least look at and consider is demand pricing. If you remember, we've been talking about the data analytic algorithm that we have and that we have been using to monitor what goes on in our submarkets and what our competition is doing and what they're offering. And literally, this program is designed so that you could alter your pricing daily if you want to see and to be relevant in what's going on in your submarket. So, for example, in Louisville, Kentucky, where I live, and I happen to be right now, during Derby week, there is a high demand on hotel rooms. A hotel room that might be $120 is now $350. Why? Well, because there's a lot of demand and little availability. It would be the same thing in your storage facility. It would be the same as if your 10 by 10s were $90. You only have one left. Your sub-market is very full. You're usually running $90 for a 10 by 10. When you show up that day, the price would be $120. It's a pricing strategy that's used in a lot of different industries. I remember Disney World caught a lot of flack when they started doing demand pricing for their tickets. But the airline industry, the hotel industry have all been using this pricing strategy for a long time. Now, we have made a decision as a company not to use demand pricing, or at least not to use it right now. Now, everything I'm going to say is just my opinion right now. And my opinion could be very wrong, as my wife points out quite frequently. But in my opinion, I think it's challenging to use demand pricing on a reoccurring monthly model. So for a subscription for an online service, or for a monthly charge on a storage unit, especially when it's like done automatically. Having demand pricing and moving pricing around so frequently just does not seem like it's a good pricing strategy, at least to me, for something that has a monthly reoccurring model to it. But I've said we're not using it now. I never say never anymore. I remember when I owned a RE/MAX franchise. As a RE/MAX broker owner, they're not necessarily the most profitable franchises to own. You charge a monthly fee to your agents, and one of the things that took off in the industry in the 90s was a transaction fee, where not only do you charge the brokers a desk fee monthly, but you charge them a transaction fee for each deal you do to help get money into the franchise to help run the cost of the office. And I remember how the brokers reacted to that. And I said I would never have a transaction fee as long as we were in business. Well, I learned never say never. A few years later, when it came to having a price increase or a transaction fee, I chose the transaction fee. So I've learned never say never. And the industry itself evolves, and the customer expectation in an industry begins to evolve. And remember, our storage industry is not a very old industry. It's maturing, and it's maturing fast, but it is not a legacy industry like the hotel industry or even the apartment industry today. Now, as a company, we have decided not to do demand pricing right now. In fact, because we've decided not to do demand pricing, we are using that to our advantage. For example, in some markets, we're blitzing the area with ads and videos saying that we don't do demand pricing and our competition does. And very often we will get people into our facilities who took up the larger players on their initial offers, but after the third or fourth price increase in 4 or 5 months, they got tired of it and came to our facility. In fact, if we need to, I will lock the rate in for a period of time, a 6-month period of time, in order to get a new lease if we need to. Now, don't confuse demand pricing with value pricing that we talked about last week. If you didn't watch last week's episode, watch it. I'm not talking about value pricing. We are starting to employ that pricing strategy. What we're not doing is demand pricing. And then what I've seen is, all too often, you have customers come in at one price point, the guy next to him's at another price point, the street rate's another price point, and with demand pricing, after a while, unless you're moving everybody up or down, what happens is there are 30, 40 different prices for a 10 by 10. We try to keep as much as we can the pricing the same throughout the facility. Why? Well, if I was a customer, I would want to know that I'm paying what my neighbor's paying for the same thing. But that's just what we're doing. The real question is, what about you? What are you going to do? Now, we have the data analytic tools available at our disposal today that you could employ demand pricing in the next week or two if you chose that as a pricing strategy for yourself. There may be a valid case for it. I'm just sharing with you what we're doing, but the real question is, what do you want to do with your facility? For us, we have made a strategic decision as business owners not to use demand pricing, and the fact that we're not using it to have that be a differentiator between us and the competition in our markets. But that's just our strategy. What are you going to do? Using demand pricing could be as valid a strategy as not using it. So I invite you to explore it. As a business owner, you should at least be aware that it's there and make an informed and intelligent decision about if you're going to use it for your self-storage business. So please, I'm real interested in your ideas on this pricing model. Feel free to share in the comments below or in Facebook. And if you haven't joined the Facebook page, please click and join that. But I'm real interested in your experiences with demand pricing, your thoughts on demand pricing, and particularly if you're a smaller company that's currently using demand pricing. I would love to hear from you on that. So I wanted to just share with you the availability for all of us is there today to use this pricing technique if we choose to. So I hope these last few episodes have been helpful. My goal is to stimulate your thinking and have you get out and do the research necessary to find out what are the tools and the ways of running a self-storage business today that you can use that will close the gap and have you operate at a much more efficient rate and a much more competitive rate, especially in markets where there are a lot of REITs and large self-storage companies as competition. It's critical that we stay relevant to small investors. This is a fantastic business, but this business is evolving and changing quickly. And it's prudent upon us to stay on top of what's happening in the industry. So share your thoughts on demand pricing, and I look forward to being with you next week. My name is Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Quick Start Academy. That is an online portal for training and getting in the self-storage business. We have training on there that's both free and paid for. We can help you, assist you in analyzing facilities, building, buying. Go to creatingwealththroughselfstorage.com to find out more about it, or go to the self-storage quickstartacademy.com. I look forward to being with you again soon.